Hello everyone, this is George Bayruthi from FS Securities, a stockbroking firm on the Gold Coast in Queensland, Australia. And this is a podcast where I intend to bring you up to date with what is going on in the financial world and how to be successful in trading or investing, and whether you're investing shares, options, commodities, foreign exchange, or actually any financial instrument. For many years, I've been writing articles on where we are heading in the financial markets. We've had many successes and few failures. Obviously, no one can get it right all the times. I have recently provided you with some recommendations and advice, and maybe you did listen or maybe you did not. So we ask you to test our results and our recommendations, and now is the time that you can make a decision. Late September, I provided you with this chart and commentary about our Australian market. The ASX 200, which is an index that comprises the top 200 companies, is shown in the chart. I want you to focus on the orange line, which you can see here, and the pink line and the black line. All of these are moving averages. The orange line is the 50-day moving average. The pink line is the 100-day moving average, and the black line is the 200-day moving average. The position or the relative position of each of those in relation to each other can determine the trend and gives us indication from a technical point of view where the market is heading. Now you can see in the shaded area here that the market back in September, late September, was actually going almost sideways, and we could see a convergence, almost a convergence between the orange line and the pink line. We expected some kind of some change in the marketplace. I knew that the midterm election will take the control of the lower house of Congress from Mr. Trump. We knew that the US and China trade war could actually cause a bit of havoc regarding the global economy. We knew that there is a possibility that Australia may be heading for a recession. And remember, 2 consecutive quarters of negative GDP can technically equate to a recession in Australia. And we may see one coming up very shortly. On the 5th of October, I wrote an article in my daily market report and posted on my website, and I said, if you look at data of what happened during the 2008 global financial crisis, you are excused to think that maybe, and I mean maybe, we are in similar situations. Are we heading for a financial tsunami, I may ask? Well, remember that in the 2007-2008 financial crisis, we've had some problems in America with the banking situations, with the loan that have invested in real estate, and of course the market, the domestic housing market in America dropped, which created a bit of pressure, main pressure on the terms of the loans that Americans were taking. Now here we're talking about the debt that Australians have incurred over the last several years. And at the moment we see that the debts actually equate to more than 100% of GDP. And that is a problem, major problem in Australia. And we were very concerned about that. From a level of 6,200 in late September to 5,657 on Friday's close, we've seen 9% drop in our market, wiping out many billions of dollars of your portfolio and many other people's portfolio, and of course your wealth. I'm afraid it is not the end of the downtrend. On November 13, I wrote that we are in a bear market for at least 12 months. So the question is, what are you doing about it? Do you need to talk to someone to protect your capital? We are ready to help you if you need any help, and all you need to do is call us. And to find out how to call us, the next slide will show you how you can contact us either by email or by phone. So take a pen, write it down, or you may want to call us directly and speak to us about your current situations.